Hello everyone. In today's lecture, we are going to discuss the process of bookkeeping and introduce the trial balance. Journal and ledger. First, let me introduce the general process of bookkeeping. How do we know a transaction occurs? For example, how does an accountant know a salesperson sold a watch to a customer? This transaction information is shown either in a receipt or in an invoice. These business papers that describe transactions are called source documents. So an accountant identifies and analyzes transactions according to source documents, such as invoice, checks, bills from suppliers, purchase orders, sales tickets, and so on. Now, since we know the importance of source documents, we have to make sure that the source documents are reliable and objective, so that they can provide a real proof of the transaction or business events occurred. After the accountant identifies a transaction based on a source document, for example, Ms. Lee saw an invoice from a supplier and knows that a purchase transaction has occurred, and the trading party is the supplier A. Then she needs to record the purchasing transaction into a book. In the accountant's book, there are two types of documents that record transactions. One is the journal, and the other one is the ledger. Before doing any recording, let me discuss what is the difference between journal and ledger. The ledger is a record containing all accounts that a company uses, while journal contains a complete record of each transaction in a chronological way. For example, the journal shows it sold a cup of coffee to a customer on Monday, purchased coffee cups from supplier on Tuesday, paid the salary to employee C on Wednesday, and so on. All records in a journal are ordered by the transaction time. On the other hand, the ledger shows the company has a certain amount of cash, a certain amount of inventory, the value of the equipment, and the amount of loan borrowed from a bank. So all records in a ledger are ordered based on the account names. What is an account? An account is a record that contains the increase and decrease of an asset, liability, equity, revenue, or expense. The ledger contains all accounts and the data in these accounts. Generally, what accounts will be used by a company. Before discussing accounts, let me introduce the accounting equation. The golden rule of accounting is maintaining balance, especially the balance of accounting equation. What is accounting equation? It shows the assets of a company equal the sum of its liabilities and equity. According to accounting equation, there are three types of accounts, including assets, liabilities, and equity accounts. Assets accounts record the resource a company owns that are expected to generate future economic benefits, such as cash, equipment, and land, and etc. Liabilities accounts record how much a company owes to other creditors. Liabilities reflect obligations that a company should fulfill in the future by providing service or products or paying assets, like cash, as a settlement. Equity accounts record the ownership of a company, which shows how much the owners invested in the company. Equity equaling assets less liabilities means the equity is left over after creditors' claims on the assets. For example, if a company bankrupts, the creditor will take the assets first, and the rest assets belong to owners. The equity accounts can be further divided into revenues, expenses, owner capital, and owner's withdrawals accounts. Revenues accounts contain the transaction about the sales of products or service to customers. Expense accounts record the cost of goods or service to earn revenues. Revenue increases equity and the expense decreases equity. Owner's capital shows how much owner put money into the company, which increases equity. And the owner's withdrawals show how much owner take from the company, which decreases equity. In summary, the accounting equation can be further expanded as assets equal liabilities plus owner's capital less owner's withdrawals plus revenue less expenses. Please go over the accounting equation again to make sure that you fully understand the meaning of the accounts. So that's a brief introduction of accounting equation, the ledger, and the journal. Thank you for watching this video.